In this video I'm going to show you how you can profit from the huge inflation that is coming. There are 5 tips in order to survive and make money in an expensive world. Hi, welcome to Money Invest. If there's one thing we've learned about life, it's that things change. And as of now, we're living in an expensive world where prices are constantly changing. But there are ways for you to profit from all the changes ahead of us by following these 5 simple tips. In a world where inflation is likely, you want to be aware of it and protect yourself. Inflation is simply when the price of goods and services increases over time. In other words, a dollar doesn't go as far. In order to deal with this, you want to arm yourself with knowledge and take the necessary precautions. Inflation is a hot topic in the news lately. The Federal Reserve has been trying to get it under control, but many economists believe that inflation is going to skyrocket in the next few years. If you're an investor, this is great news. In this video, we'll explain how to take advantage of huge inflation ahead. You're witnessing the consequences of the country's most recent inflation spike if you've noticed that the hotel you want to reserve for a summer holiday is more expensive than last year, or that your grocery bill has gone up even though you're buying the same amount of food. Inflation is an inherent part of a market economy. Inflation may be hedged in a variety of ways. An attentive investor can prepare for inflation by investing in asset classes that outperform the market over time. Inflation's effects are often unpredictable, but there are ways to protect yourself. Inflation is a constant threat for investors and retirees, especially those living on a fixed income. Inflation can erode the value of those incomes over time, making it difficult to maintain one's standard of living. There are a number of ways to protect yourself from the impact of inflation. Here are the 5 key methods we'll discuss in this video. Tip number 1: Inflation Hedge. One of the best ways to protect yourself from inflation is to invest in assets that will hold their value even as prices go up. In other words, you want to find an inflation hedge. Gold and silver are 2 popular options. Gold has long been seen as a hedge against inflation. Many individuals have sought gold as an alternative currency, particularly in nations where the national currency is depreciating. When their own currency has fallen, these nations often turn to gold or other strong currencies instead of using their own worthless cash. Gold is a genuine, tangible asset that usually maintains its value. Gold is, however, not a perfect hedge against inflation. When inflation rises, central banks generally raise interest rates as part of monetary policy. Holding onto an investment like gold that pays no returns is less valuable than holding onto one that does when rates are higher because yields are higher. If you feel the video has been worth watching so far, then consider clicking the like button. That would make a big difference to our channel. When trying to protect yourself against inflation, there are superior assets to invest in. However, like any strong portfolio, diversification is important, and if you're thinking about investing in gold, the SPDR Gold Shares ETF, GLD, should be on your radar. Tip number 2: Bonds. Another way to profit from high inflation is to buy bonds. When inflation rises, the value of bonds falls, so investors can sell them at a higher price and make a profit. Bonds are debt instruments in which the issuer borrows money from investors. In return, the issuer pays periodic interest payments to the bondholders until the maturity date of the bond, when the principal is repaid. When inflation rises, it erodes the purchasing power of a bond's future payments. This can be good for investors if they sell the bond before it matures. In order to take advantage of this, investors need to be able to anticipate when inflation will rise. Tip number 3: Stocks. Another option for profiting from high inflation is stocks. When prices rise, companies can increase their profits by raising prices on their products and services. As an investor, you want to invest in companies that are likely to do well during times of high inflation. A 60/40 stock-bond portfolio is a simple and easy investment strategy. However, it has certain disadvantages, much like all investing plans. A 60/40 portfolio will underperform an all-equity portfolio over the long run, in comparison to an all-equity portfolio. In addition, because of the effects of compounding interest, a 60/40 portfolio may significantly underperform an all-equity portfolio over very long time periods. It's crucial to note that a 60/40 portfolio will protect you from inflation, but you'll likely be sacrificing earnings in comparison to a portfolio with a higher percentage of equities. Tip number 4: Real estate. Another way to make money during high inflation is to invest in real estate. As prices go up, the value of property will also increase, giving you a nice return on your investment. There are advantages and disadvantages to investing in real estate, just like with any other form of investment. First, the transaction expenses for acquiring real estate are significantly greater than those for buying stock. Second, real estate investments are illiquid. This means they cannot be readily and quickly sold at a loss in value. If you're buying a property, you'll have to deal with management and maintenance costs. These expenses can mount up fast. Finally, as an investor, you assume significant financial and legal risks. Real estate should only make up a small part of your overall investment portfolio. It's important to remember that real estate is not as liquid as other investments, and it can be difficult to sell in a hurry. Tip number 5: commodities. Finally, another way to profit from high inflation is to invest in commodities. When prices go up, the demand for goods like food and oil goes up as well, making it a good time to invest in these types of assets. Investors should be aware that commodities are highly volatile and that caution is advised when dealing in them. Because commodity prices are affected by demand and supply factors, a minor shift in supply or demand might have a major impact on the prices of commodities. In addition, commodities are often associated with high levels of risk. In order to invest in these types of assets, investors should be well informed and able to handle high levels of risk. They should also be prepared to accept some depreciation in value if the market turns against them. As you can see, there are many different ways to take advantage of huge inflation ahead. By following these tips, you'll be able to protect yourself from the effects of inflation and make some money in the process. Thank you guys so much for watching this video. We hope that you enjoyed it, and we really hope you've learned something. Make sure to subscribe to this channel, and we'll see you in our next video. Tips are not intended as investment or trading recommendations. Inflation is a major economic problem, but it's also an opportunity for investors who know how to deal with it.